Joel. Good morning. A good
Hey, good
start
morning.
to this week so far for stocks, although yesterday was kind of interesting. The Dow soared while the normally red-hot technology stocks, they lagged. What happened yesterday, and is that a reason to be concerned?
I mean, we're coming into month end, so you always expect a little bit of funky price action at some point, and I think we'll see that in the next 2 to 3 sessions as well. I think yesterday kind of just spoke volume. We're seeing, kind of increasing, as you just highlighted earlier, lockdown restrictions are being eased steadily across the nation. We have continued positive updates on the vaccine front. There's been, some hiccups along the way as well, but I think overall the underlying tone's been pretty positive. You could argue never before have we seen this much money, resource, and focuses being put towards one goal, and that is to find a vaccine or some sort of solution to the coronavirus. So I think tech, coming into yet even right now this morning, NASDAQ 100 up 8% for the year. The NASDAQ composites up 4% for the year. And meanwhile, you have the S&P down 7%, Russell down 16.5%. And I think it's only a matter of time. You can see a little bit of mean reversion. And yesterday kind of was reflective of that right out in the pre-market. You had the airlines were out of the, ripping out of the gates, the cruise liners, the movie theater stocks, retail as well. So, you saw the leadership really yesterday, and there's clearly a rotation into value. And it seems to be continuing this morning in Europe, European trading as well.
Yeah, it does. I mean, you look at TSA passenger data, obviously still decimated from last year, but it is gaining exponentially here. The cruise lines, some of them saying that they are booked solid for the fall and into the winter, probably more on rebookings, but still the point, Joel, is even absent a vaccine, there does seem to be a lot more reopening optimism around what's going on. When we dig into the data, at the beginning, we did not have good data. We were looking at Chinese data. We didn't know if it was accurate or not. Now we've got real data from U.S. states and hospitals, and it feels like there is less fear around this than there was. Fair to say?
Oh, 100%. And that's why I think the next 2 to 3 weeks, we're going to see some choppy trading. I mean, we all saw the pictures from Memorial Day weekend, whether it was in Ocean City, Maryland, or Lake of the Ozarks, wherever it may have been. There's a lot of pent-up demand for people to leave their homes. So I think if we don't see a massive spike in cases over the next 2 to 3 weeks, and obviously that gives us more time on the therapeutic side as well, that will be definitely a very positive signal for investors. When it comes to tech, though, I think if we do start seeing increasing relaxations, the reopening trend, continue to accelerate, you could see definitely a pause kind of in the growth trade that's just been on fire over the past 6 weeks. And given that, some of the year-to-date moves, it's pretty understandable at this point.
But Joel, I've got to imagine, based on what you just said, the next 2 weeks are going to be critical from the data perspective, because we saw those images. A lot of people criticizing all those folks in Lake of the Ozarks, Missouri, partying it up as if nothing was going on. If there's another big spike, and there certainly could be, and hospitalizations go back on the rise, what would the markets do? Now, the opposite would be, of course, is that if we don't see that spike, because we're just noticing that younger folks just either tend to not get it or not get it certainly as severely as older folks here. If we don't give us each scenario, if you will. I think you know what I'm getting at. It's early.
Yeah, 100%. I think if we don't see a big spike in cases, an alarming spike, we'll call it, I think you'll see this rotation into value. This mid cap trade probably has more legs to go over the next kind of month or two at least, right? We heard earnings from a lot of the big tech companies came in much better than feared over the past 4 or 5 weeks. Clearly, there's signs of stabilization in April and early May as well. But again, the major amount of underperformance from this mid cap complex and the value names, and I think that's probably the trade that could kind of continue to gain momentum in at least in the near term if those numbers don't rise. Now, if things kind of hit the wall again, and we do see a spike and you have to see lockdown restrictions put back in place, once again, tech's at risk. And now throw in the fact that the heightened rhetoric between kind of the White House and China, and now we're looking at two headwinds at the same time once again, and you see, and tech would probably undoubtedly suffer greatly, most likely probably the semiconductors within that trade.
Yeah. Can you quickly leave us with any kind of a good name? Give us a little something, little action, if you will, on this Wednesday morning, Joel?
Yeah, it goes without saying, the names I'm most focused on, and most tech investors are the cloud software space right now. You have Salesforce.com, Workday, and Zscaler all reporting in the next kind of 48 hours. That's going to be a good indicator of the risk appetite out there for the cloud stocks that have been leading tech higher. We know that there's been a lot of projects green-lighted over the past 6 weeks as workloads continue to shift to the cloud, and people are kind of dealing with the ramped up capacity of the work from home kind of state that we're currently in. So cloud's clear in the forefront. When it comes to individual stocks within the video game complex, it's a focus here at Wedbush. I still love Zynga as a top mobile play. I think the recent data shows that the audience that they have been attracting is they're able to retain that audience up to this point. We're seeing elevated engagement levels. They have a best-in-class live services technology, great management class, and 3 big games in the pipeline as well. So Zynga is my top play in the mobile video game space and Activision amongst the major publishers.